everyone, and welcome to Market Gauge YouTube video, something that we're going to do a couple of times a week in lieu of a written daily. You'll still get your 4 dailies a week that are all for free, but we want to try to do something with video because I want to introduce you more formally and more consistently to my economic modern family because they have just been rocking it for years. It's something many of you have heard me talk about many times, but we have not really done full analysis consistently with the images of the dolls. And by the way, in case you don't know who I am, my name is Michelle Schneider, aka Mish. I am the Managing Director of the Market Gauge Group and the Director of Trading Education and Research for Market Gauge Publishing Company. So for today, I'd like to introduce you to the granddaddy of my modern family. Let's just get his hat back on here. And this is Grandpa, say hi, IWM, the Russell 2000. And there's a couple of reasons why he is the grandpa of not only economic modern family, but also of the economy. And that's because it's 2,000 small cap stocks, all which are present in the United States, heavily into industrial and manufacturing, although that's not its only genre. For example, let me introduce you to Grandpa's dog. Grandpa's dog is called Frontline, and actually the stock symbol for Frontline is FRO, and that stock is something very interesting to take a look at. So for today, I want you to get familiar with Grandpa because every time I look at IWM, not only do I see this cute little old man that we developed and his dog, but I also see the lead indicator for how the overall economy and what the market might do, even if things like growth stocks lead for a while. We always need Grandpa to participate in any rally, and ideally, the day we start to see real growth and sustained growth in the US will be the day that IWM starts to lead the party. So what I would like to do with this today is show you a chart of IWM. And just for fun, since the Frontline chart looks so great, we're going to take a look at that particular chart as well. So let's go to the screens. So what you're looking at right now is a chart of IWM. And what makes this chart so interesting is if we go back just a little bit in time here, when the market was starting to peak in November, Grandpa obviously has a whole family. He also peaked, but it was Granny Retail that was the first to break down on the weekly chart, followed by Grandpa. So we can change in terms of leadership, but both are so important to the overall gross domestic product of the economy. This, of course, being very labor-oriented, not to mention also, as I mentioned, the industrial manufacturing. But of course, Grandma, which you're going to meet next time, is more involved with the consumer economy, or 70% of the GDP. So it gave us our first alerts, even though the SPY and NASDAQ took a lot longer to start breaking down. So as we were entering 2022, we were already under the 50, we were under the 200 in just a matter of time. And that's kind of where we stayed until we finally reached a point of such oversold condition, and interestingly enough, a mean reversion trade. And by a mean reversion trade, I mean we made a new low under the Bollinger Band in our real motion momentum indicator, and also we broke the Bollinger Band in the price. The next day had an inside day and then broke out above it the following day as a confirmation that at least in a bear market, a temporary low was in. But it wasn't really until we got into a movement above the 50-day moving average that we started to see this IWM outperform the SPY. So that's exactly what I'm talking about. Really, every rally is best when you see the IWM outperforming the SPY. So this is the benchmark right here. But also in real motion, not only did we have the mean reversion, but we also started to clear the 50-day moving average a couple of days before we actually cleared it here in price. So our confirmation of a phase change from bearish to recuperation, which is in my book, Plant Your Money Tree, was right here on this day, on July 20th, and that was our basic confirmation of a tradable bottom. Now, what made this so technical, of course, is that it followed and with little stops and starts here, but basically over the course of the month into really just recently in August, it also cleared the 200-day moving average, made another peak high here on August 10th, and then the day it gapped lower underneath the 200, tried to hold it the next day with an inside day. You see that? This day was an inside day to this day, but with the gap lower on Friday, this was really the indication that at least for now, either the rally's over or we're heading back into a bear market. That, of course, remains to be seen. And we always look at other factors like junk bonds, etc. And at this point right now, what I like to think is that if we're going to look at a measured move from the low to the high, around 190, which is where we are right now, should be the midpoint. And if you look at my cursor going to the left, look how nice it holds these levels right here, that 190, today's low, and the top's in here. So 190 is really going to be a great pivot level. It's also right now below the Bollinger Band. You can see in the real motion indicator, we had a mean reversion to the top or the sell side when it got through the Bollinger Band and then went back below it on this day right here. And now, of course, momentum is declining. And we also now seeing it underperform. So really, if you put this all together, you got to watch that 190 level. If we hold 190 and start to go back up, that's going to be a pretty good sign for the market. Overall, it means that we just basically had a 50% move from top to low. However, if you look at all the headwinds, it does seem sort of hard to believe that that can happen. But then again, never doubt what the market is doing. Price rules. On the flip side, if we break down under 190, that tells me that we most likely will take another visit at least to the 50-day moving average at 180, which gives you some opportunities to go short, certainly gives you opportunities to protect some of the profits if you haven't already. And thirdly, gives you an opportunity for a buy if it does indeed wind up holding that 50-day moving average. So just now, let's take a look at Frontline, because Frontline has a very different looking chart. So this is why no matter what's happening in any particular index, it's always good to look at some of the individual stocks within the basket. Frontline on a daily chart, you can see well broke out, and we had a peak high last week, and now we're working inside this big bar right here. We have had a little bit of a mean reversion to the short side, so I wouldn't be necessarily getting all bullish here, particularly since we also had a mean reversion to the sell side here in momentum, even though it continues to kick against the SPY. So at this point, I'd like to take a look at a monthly chart, because in the monthly chart is so interesting. If you take a look at this monthly chart here going back, you can see that we have really basically gone pretty much sideways in this very uninteresting stock. If we go back to 2018, essentially, in the middle of 2018, we've really held around 5, and we haven't gotten through essentially 13. The high that we have so far this month is at 1257. So considering the mean reversion trades that I just showed you and considering the monthly charts right here, it really gives you two choices. Choice one would be to see if you get some follow through to the downside with the rest of the market, in which case you may get an opportunity to buy the stock closer to 10 or maybe even 975. Otherwise, if the market does hold up and this continues to rock and roll, I would say at this point a close, especially a monthly close, considering we're getting to the end of the month, back over 13 would probably mean this has some legs to the upside. And then you could risk somewhere to, let's say, around 12. Okay, so that's the analysis today. Thank you so much for watching, and I will see you again soon. Bye for now.